For more on what to watch from Broadcom and all the other chip choppiness out there, let's bring in Ben Reitzes, the head of technology research at Melius Research. Ben, this is a scenario where Nvidia is rightfully, in many people's minds, the stock that is driving the entire market right now. How scared or optimistic should we be about the chip sector?
Hey, Dom. Well, look, seasonally, this is a time where a lot of folks digest big first half expectations. And the chip stocks, just like actually last year, ran ahead of a lot of AI hype. And now it's time to deliver. And we're seeing some cracks in terms of PC demand and a few of maybe the applications that investors wanted to see take off, such as Microsoft Copilot and a few other things, be a little slower on the uptake. But I feel like we are in the early innings still of this and feel that the sector will find its legs and get going as a lot more applications come out next year.
Okay, so let's assume, let's just say for argument's sake, that you're right, and this is a longer-term story that's playing out that we're in the early innings for. How much volatility could we expect for people playing this particular trade? Are we going to say, hey, it's a long-term uptrend, but you can see a 30% drawdown, hypothetically?
Well, 30, I don't know if anybody's smart enough to think that something that draconian will happen, but I do think there'll be a ton of volatility. It's a little bit like the 90s. We have a paradigm shift. There's a lot of learning on the fly. I think it's a lot like the 90s where this is a new market and people are figuring things out. There's a lot of new technologies out there. However, I do think we're in a multi-year shift where market cap is shifting towards semis and even some of the old hardware names. And I don't think that's going to stop. However, at times like this, where there's just a few pockets of air, maybe you would say, folks get a little worried. But I think long term, we're on a freight train. And I would be buyers on dips of the leaders like Nvidia and Broadcom.
I mean, that said, as you know, and as you're talking about, a lot of the community is questioning whether this year or next year could be the peak investment year on AI, as some of those returns, I don't want to say that they don't play out, but they have to think about whether it's enough to justify the massive spend, if it moves the needle enough, or if there's, smaller ways of kind of investing in the technology. So for Broadcom tonight, Ben, what's at stake? What do you want to hear from them one way or the other?
Well, I think people will be laser focused on the AI revenue. Last quarter, it was about $3.1 billion. We want to see that the company has a lot of momentum there, not only in the custom silicon, but in the AI networking space. And they last said that it would be 11 billion plus. And if that goes towards 12 billion, even 12 billion plus, we think investors can be happy. And the other thing we'd like to do is see some upside in AI and not have to cut other numbers, such as more in the slower growing parts of their more traditional business. So Broadcom, though, seems to be executing very well. And they also have the VMware acquisition where they're executing. And Hock Tan does a really good job over there. So, we feel like this is one that should be bought on dips because they're a long-term winner.